happens when the same stock market mania that showed up right before the last two crashes is now holding up the very market where your life savings sit, except this time it's all about AI. And why at this exact moment is China quietly buying more physical gold than it has in decades, while your financial advisor tells you to stay the course, stocks and bonds? My guest today is Micah Haines. He's an expert in financial markets and precious metals with Noble Gold. He's spent years tracking exactly this, where the manipulation's happening and where the real money is actually going. Now, here's what most people missed. The BIS, which is the Bank for International Settlements, the bank for the world's central banks, just warned that today's stock market is riskier than 2008, riskier than the dot-com crash. And that warning barely made the news. Think about it. Millions of Americans stopped blindly trusting their doctors after COVID, but we still walk into a financial advisor's office and hand over everything we've saved, oftentimes without asking a single hard question. It's the same system, just wearing a different hat. Now, fair warning, this isn't a light conversation. This is one for people who really want to understand what's happening with their money. It's very technical. Mike and I go into, deep into the mechanics of it, the stuff that most shows just skip over. And by the end, this becomes much more than just the markets. It's about whether everything that you've spent your life building is actually protected or just sitting exposed, waiting for the next crash. And if so, if it was designed for that purpose. Welcome to Man in America, a voice of reason in a world gone mad. I'm your host, Seth Holthouse. On this show, we talk to real Americans with real solutions. We help you to connect with what's happening today to the powerful decisions that people made in the past so we can learn from it and build something better. Now, before we start, please hit that like button. It really helps to get this information out to more people. Also, please subscribe and share this with someone you think needs to hear it, and leave me your thoughts in the comments. Also, remember that every show is done as a podcast as well. If you'd rather listen, just use your favorite podcast app, search for Man in America. And if you're on Apple Podcasts, a quick review really helps us to reach more people. All right, let's get into this discussion now with Micah Haines. Micah, man, it's good to have you back on the show. I always enjoy our conversations, so thanks for being here with us today.
Thanks, Seth, for having me back. Yeah, it's been a little while, I think. So always a pleasure to be back.
Yeah. So we're going to talk a lot of things, mostly markets and metals related. But I think the bigger picture that I'd like to understand is just what's happening, right? Because we saw last year, second half of last year, we saw just this roller coaster, this skyrocketing. We saw silver approaching 120, gold well over 5,000. Heading into the new year, great. Every day was an exciting new thing. But then we saw that sharp pullback. And it seems like from my limited kind of understanding of charts and everything, that silver it found and it established a really solid floor in kind of the high 50s, around 60. And it seemed like it was a pretty big deal that it didn't drop below that, right? The fact that it held at around that spot, say mid 50s. And then now we're seeing, I'll pull up just a quick, price chart, right? So here we are looking at, this is just the last 5 days. We'll look at the last month. So, here we are. Yeah, we're up, about 13% just within the last month. We were down in the, mid to high 50s, 57, 58. But even then we dropped down into, say, 56 or so, right? Back in mid-July. And just in the past week or so, week and a half, we're seeing a sharp climb, right? Whereas as today, we're recording on Wednesday. I think we're publishing this Thursday night, so you'll be watching this Thursday. We're approaching 70, right? We're getting up into 60, 67 territory. And a lot of people that I follow and that I trust have basically been kind of saying this is exactly what they want to happen with precious metals, and that a lot of people, or even I'll pull up an article, even Citibank has kind of doubled down. Even though, look, when silver was dropping, a lot of people were saying, oh yeah, silver's going back down. You guys are a bunch of idiots. It's going back down to 20 or 30. Even amidst that big pullback, and this was just published a couple of days ago, Citibank is still saying that they expect it silver to surge to 90, right? And we know that banks like this are typically very conservative. So how do you? I know you're way more knowledgeable about charts and what's going on. So what's your take on the situation right now?
Yeah, and thanks. You covered it really well, and it has been an absolute whirlwind. I'll kind of step back to this time last summer. Silver was $30, which was awesome. $30 at the time was like we were out of the 20s. It felt pretty good. Obviously the all-time high at that point was still 50. And I'd been telling people like, hey, I think, we have what it takes to get to 60, maybe $70 within the next year. I was saying that last summer and people were going, oh, wow, that'd be fantastic. Well, we're here, right? We are here. What happened was none of us knew that we'd go from 30 to 120 in like 5 months, right? The price would literally quadruple, like crazy, and hit an absolute crazy high that no one expected to have to then give some of that up in a normal way that you expect by letting off steam and having to retest breakout levels and things like that. And we'll get into the technical line, the support and resistance and things like that I see. But you're right. I mean, if I had just said to people last summer, which I was, this time next year, you could expect to see $60, $70 silver. And they're like, wow, are you kidding me? I could double my money in a year. They're very happy. They're very happy. And the people who bought the year prior in the 20s, they've tripled their accounts, not just doubled their accounts. And that's in like 2 years. So from here, I suspect that this time next year, we probably have a natural floor of about 100. 90's low, but coming from a bank, like you say, is actually pretty conservative, and that bodes well. And then I think it's even higher beyond that. But the proclivity of silver to basically be like an absolute bottle rocket, it's a tiny market. It's extremely volatile. It's super thin. So when you have a lot of attention and a capital flowing into it, it goes further faster than anyone can possibly imagine. And so 120 is going to be nothing compared to where we're going. It is the all-time high now, much higher than what anyone thought possible. But of course, going from 120 back to 55 or 54, or maybe it was 53.75 technically, or something around there, it definitely hurts. If you bought in the hundreds, it hurts to have it go down there. In these kind of blow off top kind of FOMO types of moments, we both heard, and we were talking about on this channel, that silver has even higher than that to go, right? And silver has all these other fundamental reasons to do even better in the coming years, and it will. But at that time in January, it could never go down, right? It could never go down. The shorts were done, the banks were done, the manipulation was done, all this stuff that I, obviously believed in too to some degree. But like any market, you have to ebb and flow. You have to go up and down. It's a natural part of any market, especially a bull market, to have these corrections or these kind of interbull market consolidated periods. And what I think is, last week or the week before, getting back to that 50 zone, it was, oh my gosh, it's going back to 30. Oh my gosh, it's going back to 40. And it's kind of the opposite of what we had in January, where it can't go down. It's never going to go down. Now it's got to go lower. It's never going to go back up. And that big sentiment indicator is big for me as a contrarian. I actually read a lot into sentiment, but I read a lot into seasonality as well. And I've been doing this as an investor for over 10 years. I've been doing this here professionally at Noble Gold, guiding people into physical metals for 6. And the summer is always, if you look at 50 years of price action and price data, June and July often are the worst months of the year for precious metals prices. Now, it's one of the best times to buy, but it's one of the worst times to sell if you need to and if you need the cash. But the accumulation that we saw from existing clients that have been with me for years and have gone through this natural seasonality, we actually had a pretty busy summer because everyone's saying, oh yeah, I remember metals suck in June and July. And then they rip out of here and go through the fall. And we almost always, and I actually can't think of really any exception since I've been here, since I've been investing, we always have a pretty decent fall. So the worst seasonality is the summer. We always have a nice little fall rally. I think this year won't be any exception, especially with the election coming up and a whole bunch of big global macro geopolitical things still going on in the background. And so, like you said last week, $55, $56. I actually made another buy there at 56.70, 56.80. 6 trading days later, it's $65, right? Or, it's bounced out of there. Now it's a number of factors. Natural seasonality, where it's normally weak, is over. We're coming into a nice rally season. 2, we ended up retesting that 54 level, which was the technical resistance. Going back to the fall, what happened is it went from 30 in August to 54 in October. Then it pulled back into the mid 40s, and everyone thought, okay, that's it. We're making a new all-time high, but it's barely higher than the 50th mark. It's 54. Now we're going to come back down to about 48, but then it cracked through 54 and really went off and off to the races at that point. So 54 was a level that had not been tested at all since early November, right? Since we broke out of it. And we went from 54 to 120 in what, 12 weeks, 10 weeks? And all of those $10 gaps, there's 50 for 54 and 60 and 70 and 80 and 90 and 100 and 110. Those all had to be backfilled and retested as well, which is, again, a normal constructive thing to see. When you break through a ceiling, you want to come back and test it as a floor. Then you break through the next ceiling and you retest that as a floor. Well, we had this huge gap in the chart. And not to say that a 30% drop in a single day, but I remember that first Friday, I think maybe it was the second interview we did together at the end of January, but it was that Friday that it crashed from 120 to $85 in one morning. It was what, a Sigma 6 event, like one of the most unnatural events that could possibly occur. And of course, there was a bunch of paper selling, not physical selling, that was happening to push that down. But you had a really big gap fill there. And we spent, the last 6 months churning in the mid 70s for the longest time, and then the mid 60s for the longest time. And then the last little bit spent in the mid 50s consolidating there and retesting those final gaps. So the technical retest has been accomplished. The seasonality on top of the technical retest and the consolidation is now over. The fundamentals haven't changed from the, silver at 2, 3, 4, 500 is possible. Actually, not possible, but likely. That the fundamentals have only gotten better for the metal since January. And now we have all these big things going on with the Fed being trapped. They can't raise rates. They can't cut rates. Inflation's back on the rise. Job numbers are going down. You've got the yen carry trade that's unwinding and causing instability in the bond market and soon the stock market. The stock market's at all-time highs, but that's kind of a political, that's theater right now, and just keeping it propped up going into the election, which is another thing in the backdrop. You've got Iran, high oil price, and all this stuff. So the setup is still amazingly positive and enthusiastic from precious metals holders and for metals prices. But we have to, go through these ebbs and flows. But I think we're finally through the worst of it. And I'm very excited about how things are shaping up, only being a few, not even 2 weeks into August. It's looking good.
And I recommend that literally right now, go to preparewithmia.com. So prepare with MIA, Man in America, preparewithmia.com. Here's why. So with all of these news headlines that are distracting us, which not what I'm trying to cover, but a lot of us is being covered in the world, there are some really real problems that are happening, right? So just looking at the story of the conflict in the Middle East right now, it's genuinely threatening the global food supply with fertilizer shortages, spiking energy and transportation costs. And we haven't really felt the impact, but when it hits, it'll be too late to react then. Look, I'm a big believer in preparing now for what the future might bring. I'd rather be, 5 years early than 1 day late with these kinds of things. And that's why I've always talked about the importance of preparing. And so I've partnered with My Patriot Supply, which you see here on the website, because they're fantastic. One of the best in the business. They've helped millions of Americans prepare for almost 20 years now. And I want you to join them by picking up one of their best-selling 4-week emergency emergency food supply kits. It's at preparewithmia.com. Again, this is just a 4-week supply. If this is the only thing you have, if you can just get this 4 weeks in, you're good. Of course, it's better to have 8 weeks or 12 weeks, but let this be like your baseline. Hit that 4-week number. And to say thank you, My Patriot Supply is offering you a second kit at half the price. So it's buy one, get one, 50% off. So these kits deliver 2,000 calories per day with long-lasting shelf-stable meals. They're easy to store, simple to prepare. And look, I know it's easier to just ignore what's going on in the world, but if you think about how much you're going to feel better knowing that you're prepared instead of hoping that everything will turn out fine, it's a much better place to be. So don't wait. It's preparewithmia.com. Go check it out today. Get one of those food kits. Get the second one half off. And now you've got 8 weeks for the price of 1.5 kits. You mentioned one thing I want to draw attention to. You mentioned that the drop that silver saw was like a 6 sigma, right? It was or sigma 6, however you say that. But basically, it was extremely unlikely. Right? You said that it wasn't natural, but I think that that's actually the key, is that it wasn't natural. And I like to, I'm not a guy that's into the stock market. I don't like kind of following just the mainstream things, because I've done so much research beyond kind of the normal narrative that we're told, and looking at, okay, what are the things that are truly driving what's going on here? And I want to kind of throw out a little bit of a speculation here. I'd love to hear your feedback on this, that what we saw, okay, so basically since the 70s, when they, into the 80s, when they set up the LBMA, right? When they established, because after Nixon pulled gold off the dollar off the gold standard, then gold and silver, kind of shot through the roof over the next decade or so, because gold and silver, like many other commodities, were representative of the devaluation of the dollar. And so it's like, okay, they pulled the dollar off the gold standard, they start printing a bunch more dollars, but silver and gold were still this kind of canary in the coal mine, this reflection of inflation, right? So if they wanted to quadruple the money supply in 10 years, you probably would have saw silver and gold double or triple or quadrupling in the price, because they were just a direct reflection of money supply, right? And so you think, oh wow, what happens if silver's $1,000? Silver's worth so much money, or is it that the dollar's worth that little, right? And I think it's much more the latter. So obviously they've established the LBMA, which then introduces this incredibly effective tool at manipulating the prices, which is the paper markets, right? Where they can say, oh, well, let's buy the ETFs or buy paper gold, paper silver. And as we both know, it's 350 to 1 or something like that for silver, paper silver to real silver per ounce. Yep. And so what I suspect is that they've used that mechanism for decades to keep the price under control, while they continuing to buy up gold and silver, especially gold, right? I mean, you get into like the family offices, the sovereign banks, the central banks, et cetera. We saw that there mass accumulation of gold, especially in the last decade or so. And so what I suspect is that as we kind of came into this time last year, we started to see silver and gold both beginning to break out. We saw a lot of the mechanisms that have always been used to suppress the precious metals pricing, those mechanisms started failing. And I think that one of the biggest indicators that they were failing was when we were seeing earlier this year that people were now waiting on a 4, 6, 8 week delivery time on when they have their paper and they say, okay, I've got 100 ounces of gold on paper. I want those 100 ounces of gold. And instead of a couple of days, it's now 3, 4, 5 weeks. That kills the illusion, right? Because the paper game is an illusion, and it's tricked most people that are into investing, right? Because they're thinking, oh, okay, well, paper gold's a lot better than the physical gold because I can get in and out quickly and everything. However, if something happens, you're not holding it in your hand. And so my kind of theory is that that system of price manipulation started breaking down, especially because you had the difference with the Shanghai market. You had China also working, I think, to help break that system. Even the AI Chinese guy, I think there's a good chance that was coming from the Chinese government as a way to try to break the paper system in the West.
Sure.
just to, again, these are my theories, my conspiracy theories. And so,
That's right.
so I feel like that what happened was like that drop that we saw, that one day drop, that correctly, it wasn't natural, that it was it was an intentional kind of hit. And so I think, we saw the metals prices kind of going straight up, 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 up. The banks were like, they're holding too many short positions. They can't have this. They hadn't really bought what they wanted to yet. So they pulled out all the stops to unnaturally smash the price back down and bring it down as far as they could. But we've been seeing that they've been accumulating precious metals nonstop. Like to them, this is a buyer's market of all buyer's markets if you look at their buying activity. So I think that they pulled all the stops to just destroy the price as much as they could, heading into second quarter of this year. And then now where we are now, I feel like that what's happening is we're starting to see all of the effort and energy they use to kind of try to stamp it back down. They're now running out of that energy. They're now running out of those mechanisms. You've got China, which is now greatly limiting access to paper gold, which I want to hear your thoughts on that. And so I feel like that kind of coinciding with what you're saying is that I think that we're on the cusp of another giant rally, right, as this all breaks down, because they couldn't contain it, right? It's like you're trying to keep the lid on the pot, and like the lobster's trying to get out. And but now there's like 10 lobsters and they got really big and they're punching through the lid. They're climbing out after you, right? they were pissed off. So anyway, so that's, kind of looking at, again, just the big picture of banks and manipulation. That's kind of what I think is happening. But again, that might just be some wild conspiracy theory. What do you think?
I think you've really done a good job of kind of assessing all the various places that they have and can, and the incentives for keeping a lid on price and how they've done it. You mentioned, 375 ounces of silver that they trade on paper for every 1 ounce of silver that they actually have in the LBMA vaults or the COMEX vault. So think about that. If I can sell my house 380 times in 30 seconds on the market to crash my neighborhood's house prices, I shouldn't be able to do that. I can only sell something once that I only own one of, right? So it's a very finite market. So you can...
Well, it's almost at 400. If you look at U.S. debt clock, it's 398.87 to 1 is that ratio. And gold's at basically 150 to 1.
Yep. And so the idea that you can sell 400 of something that you only own one of is ridiculous. I think when we were on that show that one day that it had crashed, and I remember being like, oh God, how am I going to do a podcast today? Like I was watching the screen like, what the heck are we going to do? But it was something like 2/3 or 3/4 of a year's worth of mining supply traded in a single hour. So 800 million ounces of silver come out of the ground every year. There are much better professionals in this space that track eligible inventories and like what the actual underlying ounces in the vaults at the LBMA and the COMEX are. I don't know what they are, but I think they're 400 or 500 million ounces. So they sold, as much metal in an hour that they would mine in about half of a year that they have in the entirety of the COMEX vault. And we know that didn't actually trade hands. They didn't actually sell their entire inventories. If they did, we would have real price discovery, and the price would have done the opposite. It would have done the complete opposite. If there's no more metal in the commodity exchanges in the world, the price on silver is, some ridiculously high number. I'm actually probably, I don't even want to guess what that could be. But you're right, price discovery will occur. I think one of the biggest things, and you mentioned this, is the banks and the bank short positions too. We've been talking, the precious metals community, have been talking for years about how short the banks are. They have these record short positions. And there's all these okay, well, anything over $35, any dollar that silver goes up by over $35 is like $1 billion in losses for the banks. Well, we were saying that, and it went from 35 to 45 to 55 to 65. I didn't see any banks blow up, but they still had these shorts on. These huge shorts. And the whole idea that there was just some number that would blow up the banking system, kill the banks, kill the record shorts, kill the institutional shorts, and then silver would go to its natural price because there's no one holding it back anymore. That never happened, but silver did go from 50 to 120 in 12 weeks. And I think a lot of that was the short squeeze. People who are losing money on their short positions because the price is rising so much. So they themselves are buying the metal and going long to try to nullify the losses in their short book. And that's that phenomenon of a short squeeze actually kind of accelerates and is an accelerant for fast moving prices. And I think we can still see some short squeezes still moving forward. But the idea was that it got all the way to 120 without them being able to get it down. And then I think they pulled out the nuke of all nukes to get price back down to where the banks could finally, exit their shorts at either a break even or a small loss, right? No one's making any money on that, but they were able to do that. Now, since price got down to what, 39.50 in gold from 5,500, so it dropped by about 28%. 120 in silver to 55 in silver, or 54 or 50, whatever, it's near 55% drawdown, 60% drawdown. Those shorts have been covered. We know that they're still around, but they've been covered to the extent that they have. And like you said, all the institutional buying, it's almost as if it was kind of a nod and a hat tip. Go ahead and nuke the price of gold and silver so that we can come in and scoop it up in Q1, Q2, Q3. China bought more in Q1 by 2 or 3 times than it did in all of 2025. So the first quarter of 2026, it bought more than it did double it of all of last year. And then in Q2, they bought 2 or 3 times more than they did in Q1. So they've accumulated record levels of gold. And you mentioned this as well. China now is also going in the direction of eliminating the possibility of suppressing price through paper speculation and paper leverage. They have increased margin requirements and capital requirements for traders to trade paper gold. But they're encouraging their citizenry and the people to buy physical gold.
So real quick, just to clarify a little bit, because I know that sometimes when you say paper gold or paper silver, and I say it all the time too, and thinking that, I know what it means, and most people do know what it means, but I think not everyone would know it, because it took me a little time to kind of figure it out. But basically, I want to try to understand, explain it in my kind of simpleton way of looking at it. Basically, it's right. So right here, this is a 10-ounce bar of silver. I've always got sitting here on my desk, I've got my old silver dollar as well. Got these kind of floating around. I could play with them while I'm doing interviews and stuff, right?
I love it. Yeah.
But basically, in essence, let's just say that right here. Say this is an ounce of gold, right? So you could say you go to the bank, you say, look, I want to buy 1 ounce of gold, and say, okay, here's 1 ounce of gold. It's $60. Okay, here's $60. But they can also say, well, you can also buy paper silver, right? So you could say, you could buy, and say that say the bank has one of these. For every one of these they're holding, they're selling 400 paper silvers, right? So 400 people all have the same piece of paper that says, I own 1 ounce of silver. Now, the advantage of paper silver is it's easy to liquidate. It's the same thing as selling a stock. You go into your Schwab account, you can go move in and out very quickly. So there are advantages to it. But it's you have to approach it the same mentality as buying, SpaceX stock or something. You don't look at the mentality that I look at buying precious metals, which is like, I want this thing in my hand, buried in my backyard if I need to, right? So the idea with that, the paper, is that they can then just, if they want to suppress the price, well, we're going to issue 500 papers for that 1 ounce, right? So they can basically, they can really screw with the supply and demand by they can just print supply, right? Which obviously then lowers demand, right? As your supply goes up, then you have too much supply to meet the demand, so the price comes down. And so China, if I understand correctly, China, which we saw a lot of the price action happening earlier this year, I think was directly tied to what China was doing, and where we saw that separation of the pricing on the COMEX, the pricing in the Western markets versus the pricing on the Shanghai Gold Exchange, right? So you saw that, oh my goodness, like silver's worth 15% more over in China versus here, or versus in the West. And so it was apparent that there was some sort of financial kind of war going on between the West and China specifically. And then but then what we saw recently, you mentioned with paper gold, if I understand correctly, basically what they've done is they've said, okay, if you're an average investor or even a pretty decent size investor, but you're not like a giant investor, for anybody that's not like a giant investor with huge amounts of capital, you're no longer allowed to buy paper gold. right? So now
That's right.
it's forcing people into physical
Physical
gold
market.
if they want to
Yeah.
be in it. But simultaneously, right, here's an article, this is from a week and a half or so ago, that China's gold reserves rise by the most since October 2023 as the buying pace quickens. So you're simultaneously, because I think China's really key with this, but you're seeing that they're stopping most people in that country from being able to invest in paper gold, yet the China itself, they're on this buying spree, like they're rushing, to buy insane amounts of gold. And so, which makes you think that it's not just them, a lot of the other central banks are doing the same thing. It's like, I think they can see that like this whole ploy is running out, right? Like the curtain, like the curtain in front of the Wizard of Oz is like almost pulled all the way over
The
and you're
way
going to see
back.
through it, right?
I totally agree. And yes, I would. So a couple things is the direction is clear. Like, where are things going? You want to invest kind of looking at where the puck is going, the old Wayne Gretzky quote of like going where the puck is, you want to be where the puck is going, not where it is. So if you look at all the signs, I'm going to rattle off a few things here in just a sec, but all the signs point to the emphasis of the future of the global economy in the future will revolve around physical gold and physical settlement in gold. Physical gold is, irreplaceable. In many cases, silver too, it's irreplaceable. It's the most strategic commodity in a lot of different industrial applications, but it's a monetary metal as well. And the whole paper gold versus physical gold, and it's like, yeah, if I'm a trader and I just want to, you know, have exposure to the price action for a month because I think there's going to be a month rally and I don't want to actually, buy the physical and store it and keep it on me and then go back to where I need to, sell it back again and do that. And if you just want to be in and out of a financial instrument, right? Which of course, with financial instruments, you have financial engineering. Then yeah, for some people, a little paper gold or silver position makes sense. But for investment purposes, like the actual physical commodity is what everybody wants. The whole world is shifting back to, physical commodities and physical things and strategic natural resources are what the world will revolve around. And, we could talk about other important physical items like, you don't want the paper representation of a gun doesn't help you when you actually need a gun. You need an actual gun or whatever the tool you want to talk about. But if we actually have a financial crisis or a currency crisis or a situation where the grid goes down for a month and the electrical system is cyber attacked by Russia or China, you need physical gold and silver in your hands. You don't want paper gold. They don't power these missiles with paper silver, right? They don't you don't have paper silver in a solar panel. It's physical metal. You need the actual commodity. So the world is shifting towards this, and China's the best example. And that's kind of watch again the direction of where they're going. And they're, obviously they're our biggest adversary potentially, or the biggest threat to, US global dominance. China's a superpower, and this is a very unpopular opinion, but I'll share it anyway. I think we are all worse for being part of a democracy because every 4 years the weather vane, changes directions, and our strategic goals as a country are constantly being shifted from, pro business to pro socialism or whatever. And it's every 4 years we're kind of resetting the agenda and we're just going in a circle. Whereas China looks at benign dictatorship, or benign or not, that's probably an argument that can be had. But they look out 100 years. What do we need to do between here and there to become a global superpower? And they're just boom, 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 boom. They're doing it all, right? They're acquiring all the rare earth deposits. Russia's been doing this with uranium deposits and uranium enrichment capacity. We're screwed in this game of risk, which like the pieces to be had and to win and to fight over are all strategic, physical natural resources and commodities. But to, list a few things is, China's now been buying physical gold for like record levels for 21 consecutive months. They added 10 tons alone in July. They have the second most physical gold of any country in the world. We have 8,100 tons allegedly. They're nearing 2,500, but truth be told, I think they have way more than that, and they're waiting for that kind of key moment to pull back the curtain, and the weather, the Wizard of Oz, and show that they probably have 10, 20 plus tons of gold, but they're moving
Thousand,
away
right? 10,
from.
20,000.
Oh, sorry, 10,000. Right now they have 2,500. We have 8,100, right? So they probably have 10 or 20,000 tons. They bought 10 tons just in July, like I said. So, this race is like an arms race, but it's a physical gold race. But they're also doing other things like, limiting the ability of people to trade paper, forcing them into the physical market. So there's more retail ownership, setting up their citizens the right way. But they're building physical gold infrastructure too in Singapore and in Hong Kong and in Shanghai. They've got all these huge vaulting networks that are now meant to settle trade in yuan or gold. China's moved away from collateralizing treasuries, which forever is what they used to do. They'd say, okay, some African country has $500 million in treasuries. We will collateralize that half a trillion or half a billion and give them a loan in yuan to develop, a mining road or a ring road or whatever electrical infrastructure that they need. And they take, ownership and percentages in that. And that again ties into how they've been able to get all these natural resource commodity rich countries, and they're like getting there
Yeah.
before we are,
Belt and
right?
Road.
And exactly, and they've been doing that by collateralizing treasuries. They're no longer doing that. They're collateralizing gold holdings and giving them loans in yuan, which is actually going to create, a lot of demand for yuan and strengthen the yuan over time as well. And then add to that, they're just working on all these other strategic settlements where you can settle trades or oil purchases or whatever in yuan rather than in US dollars, which we know with the BRICS and everything else has been going on for a very long time. So, all of these things in combination point toward a world where physical ownership is 100% the most important thing. So as individual investors, we should be looking at that and saying, oh crap, what do I have in my portfolio? Oh, I got stocks. They're in a huge bubble. Most risky market we've ever seen in stocks in forever. And we can talk about this in a little bit, but the Bank of International Settlements issued a warning about a month ago saying it is the scariest market as far as the leverage behind it goes. Worse than housing in '06, worse than the dot-com in 2000. And the Bank of the International Settlements is considered the central bank for central banks. They don't issue warnings lightly, and they definitely don't sensationalize. So if they're saying this is the riskiest stock market with the most leverage behind it that we've ever seen, take that as a pretty good sign that stocks are in very frothy bubble territory. And that's not a good timing indicator. Doesn't mean it can't keep going this way for a couple of years. But my guess is beyond midterms, a massive stock market crash, worse than anything we've ever seen, and kind of a combination of all of them is very likely. And I'd say maybe we have a year or so, maybe less.
Yeah, I mean,
But
it's like you can't talk about these things without addressing that, right? Because what's also sucking a lot of the capital out of precious metals, especially at the retail level, right? It's because you don't see these big sovereign banks investing in the stock market. You don't see China, their own central bank is not kind of loading up on SpaceX stocks, right? It's kind of the
because they're
opposite.
not emotional, yeah, they're not emotional FOMO traders.
Yeah,
They are strictly looking after their future, either strength of their financial institutions, the financial future of their citizens, of their currencies. Like they are big time institutional investment bodies that are not very price sensitive at all, right? And they've been using this dip in gold and silver to buy a whole bunch, but yeah, I think it's the opposite with Main Street, right? You end up having people go, oh, geez, SpaceX IPO. And last I checked, I thought it was down a whole bunch. And there's some analysts saying that actually when these big IPOs happen, often they kind of ring a bell and mark the top for the actual, secular bull market in
yeah,
stocks. And that's what happened in 2000. And here's the thing is like most people's portfolios are 60% stocks and 40% bonds, or 60, 70-30, whatever your risk tolerance is. And your financial advisor, and I think one of the worst pieces of advice that you can ever get, nothing against financial advisors, they mostly are well intentioned, but they're just conventional thinkers and mainstream thinkers, which probably the biggest problem with all of it. They'll tell you, oh yeah, the market might crash. Yeah, sure, sure. It'll always come back, right? It'll always come back. Yeah, sure. Maybe on a longer time frame, there are historical precedents for markets that crash by a lot and take a really long time to get back to break even. So 2000, the Nasdaq crashed by 85%, the dot-com bubble, 85% crash, and it took until 2013 to break even. That was 13 years of being in the red if you owned the Nasdaq. The Nikkei in Japan, and they had the most expensive real estate in the 1980s, and they also had the most expensive stock market in the world in the 1980s. And actually, it sounds pretty familiar because that's us right now, the most expensive stock market and real estate in the world. And when the Nikkei, or their version of the S&P 500, crashed in 1989 by 80% or 85% again, it took until 2019 to break even. And I was born in 1989. So I was turning 30 in 2019. So, 30 years to get back to break even. So I think if we see all of these risks and these bubbles and the circular financing and all this stuff behind the AI, and again, not a great timing indicator, but not a matter of if, but when it crashes, it's going to be big. And it's going to be bigger than either of those two examples likely, which means that, can you afford to have a 50 to 80% drawdown in your stock portfolio at the age of 50, 60, 70? Maybe even 80, when you could be looking at 5, 10, 20 plus years to get back to break even.
And I think
So,
there's an important point I want to make really quickly that kind of ties into what you mentioned there, is that I would say that the people that are watching this show are very, very awake people in many ways, right? And I applaud them. I'm very grateful for the audience. I see in the comments, it's really, really intelligent conversations. Now, but if you look at, there's a lot of people that they don't trust the system, right? And I think COVID, broke it for a lot of people, where they're like, okay, I can no longer trust the government. I can no longer trust my doctor. I can no longer trust, the media, of course, right? Some people knew it before then. But I think if you take a step back, it's like, okay, well, what is this? What is a symptom? It's like, well, there's a system, right? Whatever you want to call it, the cabal, the elites, there's a system. That system, the same system that educates us, to be factory workers and to, shut up and raise your hand, and, the same system that has conditioned us to become what we are today, right? Which is a much, much weaker version of, I think, what it means to be human, what it means to be an American, right?
Agreed.
That same system is designed to keep us poor, to keep us distracted, to keep us busy scraping by, so we never realize it's the system, so we never fight back against the system. And I think there's a lot of people that, especially now, they would never walk into their doctor's office and say, hey, I'm worried about getting the flu. Can I get that new mRNA thing that you shoved my arm? They'd be like, there's no way I'm doing that, because I know that doctor is being paid by Big Pharma and everything. However, a lot of those same people will still walk into their TD advisor, to their Vanguard advisor, and they'll say, so where should I put my money at? And they're going to say, hey, we should put it into these stocks and these bonds. They're never going to tell you that you should be investing in precious metals. They're never going to be telling you that you should be, hey, Seth, pull your stuff out of your stock portfolio, go buy some land. You know what I mean? It'd be the equivalent of you going to your mainstream doctor and him saying, you know what, instead of that new mRNA shot, I think we should give you some turmeric and some oregano oil to help boost your immune system, right?
My thing on this is, you never go to a Ford dealer asking them what Chevy you should buy. Right?
Yes.
It's like, what are you insane? What do you mean?
Yeah.
You don't go to your financial advisor asking him, what was the best way to protect yourself from what's coming in.
But in the same way that the doctors are trained by the medical schools, which are owned by the big pharmaceutical companies, it's like, do you think that the same thing isn't happening in finance, that your CPA or your investment advisor, they're going to the same version of the schools that the doctors are going to, and their schools teach them how to make sure that people keep their wealth into a system that the elites have complete control over. And so when they want to flip the switch, when they want to collapse the market, when they want to do that, they come, they reset it, they shake everything up. All of a sudden, your net worth is now 10 cents on the dollar from what it was a year ago, and they are scooping everything up. And so I think it's just an important point for people that have a lot of money sitting in the stock market.
Exactly. And the architecture of the things that happen, right? Like with COVID and, Microsoft or whatever filing petitions or sorry, patents for, data collection and essentially, talked about this on another show. Essentially the technology that would be behind a social credit score that was
Well, I
filed
mean,
like a day
Microsoft's
before COVID
patent
broke
is
loose.
patent 060606, and it's
Exactly.
it's the patent for basically mining crypto off of the human body's energy
Right.
production, right? It's a
Right.
very like
So Mark of the
Matrix-esque
Beast. Oh,
dystopian thing.
for sure. And big and government institutions and central banks and big finance and big media and big this and they're all kind of in on what they're working on, what the kind of sequential series of events is going to be that leads to a final boom bust crisis or whatever. And they already know what's coming on the other side of that, right? COVID, we want to vaccinate everybody. They engineered it. Total fabricated event. Total bullshit disease too. They just the thing that they screwed up was they didn't get it right. They didn't actually make one that was bad enough to scare enough
I
people to get
agree.
it
Yeah.
get it going. But so with this, it's like, well, what do they want on the other side of this? Social credit scores, digital currencies, total control, tyrannical this and that,
Tokenization.
tokenization. Well, to get there, they have to create some kind of absolutely massive financial crisis. We've already got the makings of it with the BIS's warning. It's like, hey, the tinder is there, the wood is dry, it's been piled up, the fire's going, I doused it with gas. What's the spark? So, it'll come. It could be soon, and not to say it's going to be like tomorrow or next month. So I'm not like, fear mongering here, but you want to be prepared like 6 months early rather than 2 months or 2 seconds too late. So
Exactly.
the point of getting into this is the stock market's the riskiest it's ever been. Sure, everyone's still making money, but you won't know, you're not going to get advance notice before the match gets struck.
Well, the only way you
And
have
then the
advance
bond
notice is if
market.
you watch what the elites are doing, and they're pulling all the money out of the stock market. Buffett's sitting on his largest cash position, I think, in history, right? The sovereign banks, central banks, they're dumping treasuries. They're getting out of paper. They're getting into physical. Like so, the writing is on the wall.
Oh yeah, and they're dumping bonds. The bond market's another big thing, right? So 60% stock, 40% bonds. The bond market's crazy too, and we've seen these interventions with the Japanese yen. We've helped we've the US hasn't had to do this for 28 years. We sold euros to buy the yen so that we can strengthen the yen so that it doesn't continue to drop and become weaker, because if it gets any weaker, they're going to sell all their treasuries to essentially support their currency. And if they sell their currency or their treasuries, which means they sell bonds, the bond price goes down, but that means that the bond yield goes up. Well, bond yields control debt instruments and credit facilities and commercial debt in the entire economy. So mortgages, car loans, credit cards, everything is based on that. And it's already pretty high. We just had the 10-year, the 20-year, the 30-year, they all have had major rises in the yield that are at 20-year highs, 30-year highs, which means that it's factoring in massive inflation years from now. But and not to get too complex with all this, but the bond market's in a lot of trouble. We wouldn't have intervened in the yen and try to get prevent the yen carry trade. And I'm sorry, that's what a lot of other people have been talking about these last few weeks since the FOMC meeting at the end of last month. It's a big, important concept too, but we don't have to get into it. But all these little things combined, it mean like we have the riskiest bond market of all time, the riskiest stock market of all time. And what are every single one of your portfolios made of? Your 401k, your IRA, it's all that conventional 60-40 model, which for the last 40 years has worked pretty well. But I'm not investing for the next 40 years by looking in the rear view mirror. You got to look at where the road is going and where the signals are leading to, which is all these things that the East has been doing and that we're seeing in broad daylight happen. It's like it shouldn't be ignored by us. So obviously I'm already prepared the best that I can be. I think you are too. You've made all the changes and all the preparations to your portfolio and what you invest in, how you protect your net worth. But I think a lot of people are still extremely underprepared, like very underprepared. Gold ownership, and this is in American portfolios, and this includes physical gold, ETFs, mining companies, everything precious metals related all together is about half of 1%.
It's
While
crazy.
70% is in stock, which is the highest concentration of all time.
By design. By design, right? Yes, I think that like the one last, we're not, there's always, it's kind of, there's always more, but one of the last kind of components of my own kind of preparedness, stock up is I've been kind of looking for like a 1980s, vehicle that I can buy, something that, is going to be EMP hardened. I was just looking at, there's
An
like a,
old school runner.
well,
Yeah.
they did a
Yeah.
military version of the old Chevy K5 Blazer, and it's got a diesel engine in it, and it's like the
Oh,
military
nice.
spec. I just found one that's like been completely restored, so I've been looking at like, okay, I need to get some one of these vehicles that I can fix myself. It's not going to get
It's
wiped out with an EMP. So it's
That's
like,
actually something I haven't even really thought about. I've got all the other stuff, guns, ammo, food, water, we grow and eat and chickens and goats and sheep and
yeah,
getting pigs this fall, which should be fun. But yeah, no, I haven't thought about that because like all the chips in your car would get fried in the EMP and you couldn't go anywhere, right? So
exactly.
these old, and I think there's like, you see these phones that are coming out now where it's like no screen.
Yeah.
They're new and they look cool, and you can text
There's flip
but
phones oftentimes,
but they're
right?
they're like the no doom scroll
Yeah.
new things, right? And it's like that's where things are going now. It's like less technology and stuff is
Yeah.
actually where people want to be and simplify things again. I think a car that is hardwired, no chips, no dials, no digital, just pure analog everything would be actually pretty cool. Like a
Yeah.
new, modern something like that would be neat. But
Yeah. 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 So I mean, I guess you kind of, so looking at this, the whole picture,
yeah,
what I'm seeing is like, okay, we're seeing that silver and gold, again, no one has a crystal ball. Actually, I don't have a crystal ball. They've got a crystal ball because they're controlling these things through their own decisions. But it's like everything looks like it's kind of playing up for a big spike, right? And that's one aspect of this, right? It's that it's for the same reason that I was buying like crazy when silver was at 40, $50. You know what I mean? I added a lot of, silver to my portfolio because I saw the writing on the wall. I think that we're in that again. So that's one thing. But the other thing is that, and just being very sober with whoever's watching and listening, it's like if you've got the vast majority of your wealth, if your retirement, your nest egg is sitting primarily in stocks and bonds, right? And this isn't without even looking at, okay, hey, if I buy silver at this, what if it, can it double and I make all this money? It's about preserving, right? Obviously, it's great if you buy silver at $65 and within a year it's at 150. That's amazing. But what's more important to that is it's an insurance policy, right? And that's the key, right? Because you're right. This warning from the BIS, like this is not something just to write off as like, oh, another kind of fiery, doom-based thing. I'm seeing
but no one
everywhere.
talked about it. No one, almost no like mainstream. It wasn't on the news. It was, obviously this is a Reuters article, but it just kind of went under the rug. But I agree with you. Look, the first and foremost reason to buy precious metals is as financial insurance. It can never go to zero. It is out of every currency. It is outside of the banking system. It is your wealth in your hands in a format that basically has lasted and will continue to last for thousands of years. Always viewed as the tier one asset by everyone in the world throughout, again, 5,000 years of history. It's not going anywhere. So as a defensive play, gold and silver are just the safest thing to do. But in the right conditions, they're also where you make the most money at the same time. So you have the double whammy of nothing's safer and nothing's returning better, or nothing's getting bigger returns. Now we did see that again, 30 to 120 in 5 months. Where else can you get a 300% gain in that? Now that was only if you were trading it, from the bottom to the top perfectly. No one does that. You own gold and silver as insurance first. You'll own it for many, many years. But I have, price targets I'm pretty sure that I've shared on this channel. Mine are extremely conservative compared to some others. I think, in and around 2030, because we still have a long time left for this market crash to play out, for the ensuing recession to play out, for the ensuing monetary intervention and money printing that we haven't even talked about. Like we saw a big print in 2008. We saw a big print in 2020. In 2020, they created $9 trillion out of thin air in 1 year. When the bubble pops and you've got most expensive housing, most expensive stock market, and both of them are free falling and bonds are free falling, where's all that capital going to go? And in 2008, when the stock market popped, it crashed by 50% over the next 6 months. That's from October 08 to March of 09. Well, from let's say December of '08 to 2011, so we're talking 2 and a bit years, gold tripled from an all-time high. It was basically the most expensive it had ever been right before the stock market crashed. It tripled in 2 years. And that was because people finally rotated capital out of where it was being lost into where it would never be lost. And that rotation of capital will still happen. But unfortunately for most, it doesn't occur and that thought doesn't click until you have lost 20, 30, 40, 50% of your stock portfolio. And then you go, okay, I need insurance. But owning the best form of monetary insurance over the next few years, in which we are guaranteed to experience some form of financial crisis. I can't tell you when. It's just a matter of when, though. You'll be paid handsomely. And I'm telling people this. I've been saying this. And I say this to clients, and I stand by this. And this is again, other analysts, whether it's Michael Oliver or David Hunter or any other or my other big influences that I love to follow and listen to every week. My target for 2030 is give or take $10,000 gold. And what I'll expect on the gold to silver ratio, meaning the price ratio or the exchange rate between the two, will be something like 30 ounces or 20 ounces will equal an ounce of gold.
So kind of
that means
1 to
that
20, right? So
$10,000
500 silver.
$500 silver or 300, so sorry, $300 to $500 silver and about $10,000 gold. Now it could be much higher in gold, which would just imply that those ratios mean higher silver prices. Lots of people talking about 500 to 1,000 or $1,000 plus, but I'm not, sure, if we get there, fantastic.
Yeah.
I'll probably never work a day again in my life.
yeah, me too. Well, good. Well, what's
Yeah,
that?
but we'll see. But we'll see. And,
Yeah.
and we're not guaranteeing anything on any kind of time frame. You're buying it as insurance, first
Exactly.
and foremost. And the thing I'll end with and land the plane with here is I just want to underscore people are not aware of the amount of risk that exists in the system right now. They're very happy with their 401k statements that come every month. But you need to be aware of where we're at in the cycle, right? We're very close to the end, I think, in these other asset classes. So I think we've gone way over time. But that probably means that we were having a little too much fun. So
I never I never could have imagined having such fun talking about precious metals and markets. But I just I just enjoy it. I enjoy it. It underpins so much of what's happening in this world, and that's why I like it. It's this little window you can look into that shows you so much about geopolitics, how the world is run, so much more.
And focus on what's real, right? Real assets, real people, real, whether it's health advice or whatever, but focus on what's real. And that's where things are going. We're moving away from intangibles.
Exactly.
We're going towards the real stuff. So focus on that.
Yeah, you don't want a piece of paper saying you own 40 pounds of rice. You want a bag of 40 pounds of rice, right?
Exactly.
So, Micah, what is the best way for people to get a hold of you? And that's why I like interviewing you, is that, and actually, people even tell me this. Even my own mom, right? She's worked with you on her own accounts. But I like that people can actually just access you directly. And so, email, I think, is probably one of the best ways to get a hold of you, right? And if someone even wants to have a text conversation, they should just email you with their phone number, and you can text them. But what do you recommend for people to get a hold of you?
Yeah, so those of you who, again, you can work with me directly. We'll do a free consultation, no strings attached and no pressure. Like, again, just a fellow investor and fellow like-minded individual guiding you, through whatever it is that you need help with, answering questions and giving info. But I find this, you can call me, obviously, 877-646-5347. But I'm finding that lately a lot of people are a little gun shy. They're answering the phone less and less. They want to pick up the phone less and less, and I don't actually blame them at all. I'll give you my email here, and you can make it available, Seth, wherever you deem fit. But I'll just at least give it to people here.
Yeah, I'll put it on screen, and then also I'll put it in the show description.
Yeah, and I've had a lot of success with people who are a little bit reluctant to pick up the phone. They don't want to get harassed or anything, so they'll just send me a quick note, and you can reach me at Micah. So that's MICAH at Noble, NOBLE, IRA.com. So one more time, it's Micah at Noble, IRA.com. And that's a really great place to reach me. And you can send me a quick note saying, hey, here's my number, text me, and I can text you, and whatever method of communicating is easiest and best for people. If you want to continue the conversation, it'd be my pleasure to do that. And Seth, I really appreciate you having me on and letting me ramble for so long.
Oh no, I felt like I was the one rambling. So it's a good conversation if we both felt like we had the space to ramble a bit, which is good. I like that. It's real. It's further proof that we're not two AI avatars interacting. We're real people, which
100%.
is good. As real as this block of silver. So anyway,
and I've shown you this before. Hey, I always keep my 10-ounce rail spike.
Oh, there you go. Yes,
silver rail spike. My dad worked for the railroad, so I just keep it on my desk as a paperweight. It's my constant, play item.
Yeah, I'm like a fidgeter. I've got that ADHD thing. So
like a fidget spinner, but better.
Yeah, I know. I should get a silver fidget spinner. That'd be a cool desktop toy. Yeah. So anyway, Micah,
selling those.
Yeah, you're right, man. It's been good talking to you. And again, I'll make sure that the email is in the description. We'll put it up on screen. And I encourage people that just shoot you an email, right? That's it. Just to say, hey, reach out. You're the same as what you and I are on screen together, as how you are on the phone. You and I talk a lot offline, like off camera. It's the same experience, and so you're a great
people
person.
Send me notes that are two sentences. Some people send me notes that are 2,000 words, and I will get back to you regardless with my best advice and however I can help. So thank you.
Perfect. All right, man. Thank you. Take care, Mike. It's good talking to you.
Okay, see you later, Seth.
Did you know that in the last few centuries, over 500,000 bells have been destroyed? There were literally bell graveyards. Now, the textbooks tell us that this was to use the metal, but if you've ever gone down this rabbit hole, you discover that the sounds that these bells made had amazing healing properties. There are even claims that certain regions with lots of these bells, church bells, etc., were mostly untouched by the bubonic plague. Now, your doctor might call you a conspiracy nut for thinking that, but even modern science recognizing the healing power of sound. So check out this study from the NIH. Doctors used sound therapy on chronic back pain, and they found, quote, significant reductions in pain sensation and pain-related disability. But here's the best part. You don't need some fancy, expensive sound equipment to find relief. So a woman named Linda Bamber Olson created something called the Wave Watch. So this little device has over 1,200 frequencies that you can use for everything from joint pain to brain fog to insomnia. So I've got one and I've been using it for about 6 months. This is it right here. And I can tell you honestly that it works. Like if I'm feeling sickly or have something kind of coming on, it's the first thing that I'll reach for. And honestly, I start feeling better within minutes. And that's literally my firsthand experience with it. Even my little kids love wearing it. And here's how much Linda believes in this watch. So if you get one and you don't notice any improvements, you can send it back for a full refund within 30 days. No questions asked. So do something for yourself and for your family and get a Wave Watch for yourself today. Just go to wavewatch.com/Seth or just use the promo code Seth to save 15% on your purchase. Again, that's wavewatch.com/Seth or you just use promo code Seth to save 15% on your purchase, and those details are in the description below.